Back to the viewers here, because we got tons of this stuff coming in, incoming, Kirby and Jim. Let me pick one here out of the. There's a whole slug of them. Do bear with me because I have to work these through here. Here's one from Azamat. Okay, Azamat Buteyev, writing from Central Asia to you specifically. Jim, he writes in saying, I remember your travel around the world a decade ago. I saw you in Almaty. Which sentiment did you have about commodities at the beginning of the 21st century? Did you predict global troubles? Do you agree with Rubini, who doesn't think see reasons for growth in gold prices? I think you don't agree with him. Will people be okay buying gold mining shares if you believe in the gold story? That's a lot of questions packed into one there, Azamat. Jim.
Well, gold is, over the next decade or so, Bernie, gold is certainly going to go over $2,000 an ounce. There's little doubt about that in my mind. Buying gold mining shares, however, you have to get the right company, the right management, the right everything else. I think that probably more money's been lost in gold mining shares over the past 100 years than just about anything, except maybe airlines, because there have been so many frauds and so many promotions. But owning gold itself, I certainly expect it to go much, much higher. There's no question that you're going to have corrections along the way. We're having one now, it seems, but that's normal. That's the way the market works.
There's some anomalies going on in the precious metals markets. Jim, a lot of people asking about silver. Marty writes in from Illinois. Do you have any outlook for the dual use of silver, industrial precious metals on the other hand? And platinum has not maintained its gap, its traditional price gap, ahead of gold. What do you think about that? Silver, platinum. A couple quick words on that.
Well, gold is near its all-time high. Silver is 70% below its all-time high. I'd probably rather buy silver than gold right now. Palladium is far below its all-time high. Platinum too is below its all-time high. I think you'll probably make more in silver, palladium, and platinum right now, but silver's down 70-odd% from its all-time high.
You're not as much of a metal bug as Jim is.
I'm not. I own physical gold in my, I have it in my portfolio as an Armageddon hedge. It's there. It's less than 20% of the portfolio, but it certainly exists. I'm not speculating in gold. I think the commodity story is obviously very compelling when we're looking at inflation. I think you have to be careful, though, when you talk about energies and metals compared to the ags. I wouldn't be broadly long any commodity in this period. I think that we're starting to see breakdowns in correlations. And the key with the ags, with the grains, the oil seeds, is that these can be renewed every year for the investment in the lead time needed for mines and for drilling oil is very substantial. But every year we can have increases in crops size. Yields are increasing every year. So I think investors need to be careful when they broadly go long commodities and separate metals and energy from the ag sector.
Okay, yeah, we'll be talking about hard stuff and soft stuff. Go ahead, Jim. Yeah, quick final thought here.
I was just going to point out that it takes 5 years, Kirby, for a coffee tree to grow, a rubber tree, an orange tree. You can't just sort of snap your fingers and get a lot more commodities. Agriculture in many cases. Palm oil, I mean, it's not quite that easy.
Yeah, no, he's got a point there.
No, agree.
He's got a good point there. Although if you go to Malaysia, man, I swear, they can pop up those palm trees like you wouldn't believe, and they grow pretty fast too. I mean, they acres and acres, sea to shining sea and all that. More with Jim and Kirby, we're going to. You know, Jim, it seems like if you bet on food and the growing number of mouths as population is just exploding, especially in the frontier markets, this is a one-way bet to the moon.
Well, I'm optimistic about agriculture prices, but back to what I said before. See, Kirby doesn't do his own shopping. If he did, he would know. He would know that milk, sugar, coffee, everything else is going through the roof. I know it. Everybody watching your show knows it. Prices are going up, and other agricultural prices are going to go higher. The inventories of agricultural products are the lowest they've been in decades. Not years, Bernie, but in decades. And we're going to have more problems. There are going to be periods when people cannot get food at any price. And this has not happened in our lifetimes. You don't do your own shopping, huh? I had no idea. You were so privileged with the elite.
It's hardly privileged. We split the responsibilities in the household equally. But I will say this. I need to make it clear. I am not in the camp of deflation forever. I'm just saying that in the deleveraging process, we're seeing deflationary pressures, and that can't be argued against or ignored. Yes, we're seeing price inflation, and absolutely, I have been advocating that we are going to have an inflation problem for well over a year and a half, I think maybe even 2 years, and that the central bank, the Fed, is not, and most central banks around the world are not focused on this. We're seeing some much more focused than the Fed is, but the Fed is going to be the key to driving inflation globally when they don't address this problem early. Getting back to agriculturals, I would say this, that yes, we're seeing overall prices will rise, but the problem with investors just going in on the long side, especially on things like wheat and soybeans, is that if there is a bumper crop, these are very supply driven. The prices are very, very sensitive to supply. So when we do get a bumper crop, for the time being, demand will not outstrip supply, and you will see prices, as we're seeing in the last few days here, take a hit. So it's a very dangerous game to just go long in things like wheat, soybeans, and corn. Very different dynamics than we're talking about in the hard commodities.
Kirby, I wish I knew something. Yeah, I was going to say, Kirby, I wish I knew something that wasn't dangerous in the investment business. I've never come across anything safe, and I've been investing for many years. As to inflation, some governments are starting to catch on. The Australians have raised interest rates. The Indians are about to raise interest rates. Other people know that there's inflation in the world, and some central banks are taking a sound approach. I mean, the Americans and the Brits will print money till the end of time if they have to, until we run out of trees. But other people are starting to worry.
That's exactly right. But we need to see the wherewithal, to use that word for a third time on this show, of the central banks. Australia will be the first test if they're going to go through with a second or a third hike, if they're going to continue down this path. When we do see the effects of stimulus, especially in China, start to wear off towards the end of 2010, Japan to wear off sooner, the U.S. to wear off in mid-2010, as global growth, global trade starts to slow, and we see China's stockpiling of commodities start to affect Australia directly, will we see these central banks continue to tighten, or will we see them back off and inflationary pressures come to the forefront again? This is the question. We're at the very, very, very early stages of this tightening process. Again, only one central bank has done anything. I'm not so sure that they're going to have this bravado when things slow down in 2010 and 2011. Will be even uglier.
I got a non-concur from Jim here.
Kirby, do you really think that central banks around the world are smart enough to stop inflation after all the money that's been printed in the last 2 or 3 years? I mean, these guys are bureaucrats, Kirby. It's not as though these guys have any more brains than anybody else.
That's what I'm saying, and that's what worries me. I don't think they're going to have the follow-through to stop inflation. That's my biggest concern, and has been.
Well, it's also politics here, because these guys have a really, really short lifespan, too. Yeah. Nobody's ever head of a central bank for 20 years. This is not iron rice bowl kind of lifetime employment. I mean, you got to go, the trend is your friend. You kind of go with the flow, and whatever the political winds call for to keep your job a few more years.
Massive political pressure on the Fed and on central banks.
How do you depoliticize it? How do you depoliticize central bankishness? I'm sorry, being a central banker.
Jim, do you have an answer? I don't.
How do you depoliticize it?
Well, Bernie, in theory, they are depoliticized. Supposedly, the Federal Reserve is an independent entity which has to pay no attention to Congress. Likewise, the Bank of England. All these guys are supposedly independent, but come on, they're bureaucrats and they play to the politics.
Never happens. We had the trade minister, we had the prime minister of New Zealand on yesterday, based on our channel, telling the RBNZ that they should keep rates as low as they are. And that is not incentive, as far as I can tell. Will, Kirby, and Jim. Kirby, let me put this one to you. Kick it off with an email from David from Xiamen. He's apparently an expat living in the PRC, and ask, are you concerned about what way, and I've just been talking about the potential NPL increases as a result of the phenomenal lending that's been going on in China?
I have a pulse, so I'm concerned. Anyone with a pulse should be concerned about NPLs in China, looking at the type of lending that went on in the first half of this year, is continuing now, albeit at a slower pace, but more importantly, where that money has allegedly gone. We don't have a clear picture, but there is a lot of anecdotal evidence that this has gone into very, very risky investments. And even those that wouldn't traditionally be considered risky, China is driving its economy through bank lending and investing, and they're investing into overcapacity. That's the key. These NPLs will come back to haunt. The question is when, and what will the government do about it?